Hello and welcome to FinextraTV Unplugged. I'm Hannah Wallace, and kindly joining us on the call today is Tony McLaughlin, Emerging Payments and Business Development for Citi. Hello Tony, it's good to speak with you again. Hello.
Hannah, nice to see you.
Welcome back. So we're going to be touching on a range of topics that we've actually covered before, from digital currencies to crypto to the big techs and the role of data. But today we'll be looking at those in the context of COVID-19 and what the pandemic means for the future of money. So first of all, homing in on digital currencies then, the first observation that many industry leaders over the lockdown period have made is that there's been acceleration in digital transformation. Just for example, we've seen a number of grandparents getting on Zoom, Teams and Skypes to talk to their families the other side of the world. Would you say there's been this similar kind of acceleration in adoption for digital currencies as well?
Well, I think there's a lot of discussion about central bank digital currencies and the rise of digital payments. I guess it's been an acceleration in trends that have already been in play for a little bit of time. There's an overall thesis that digital will accelerate and get bigger, and I can see that. I can see the reasons why people say that, but my COVID experience has actually been, not so much immersing in digital, but more immersing in, the garden and, baking bread and doing crossword puzzles, almost like anti-digital. So I'm not sure. I can see the reasons why people are talking about this rise in digital and in digital payments for sure. I think in the US, them sending out, checks to millions of people just seems like a strange thing to do in this day and age. So this will definitely lead to a change in the broader digital economy, but I'm not sure it's all going to go in one direction.
And what about Bitcoin? We've spoken about Bitcoin at arm's length, but a lot of people presented Bitcoin as a safe haven when markets and currencies were in free fall at the start of lockdown, and others would argue that the fear of inflation following fiscal intervention would drive people towards crypto. Do you think this is a credible point of view? And if so, how should governments respond, do you think?
Well, I think looking at the price performance of Bitcoin, it's been up and down during the crisis. All the cryptocurrencies have. Bitcoin in itself, being the original cryptocurrency, I've got a little bit of a soft spot for it because of its ideological purity, if you like. It's this utopian idea of one currency for the whole world. But still, the adoption of Bitcoin for payment transactions, I don't think has taken off during this COVID situation. So Bitcoin remains, I think, a speculative asset, an alternative asset in the same way that people invest in, racehorses and art and wine. It's a different and what people think is a non-correlated asset class. So for that purpose, I think it's okay. For the purposes of actually making payments, it's got some significant downsides.
That's interesting. But what about China? Because they've taken a closer look at committing to digital currency. But what would that mean? What would a China-sized wave mean for the rest of the world?
I think the Chinese digital currency, as far as I can understand it, which is now in pilot in a few different places, is really more about domestic electronic payments in China. So in China, as we know, WeChat, Alipay wallets really started to dominate the digital payments landscape. And I think what this digital currency does in China is slightly rebalance and make it a more multilateral system rather than being dominated by two very large players. Mm-hmm. So early days of the pilot, many players are involved, including those Chinese big techs and I think notably the banks. And so we'll see how it goes. It's certainly an interesting case study. And, this and what the people are doing in Sweden and other places, it's all very interesting. And there's indeed a consultation going on with the Bank of England at the moment about digital currency and many international bodies talking about it. So I think it's very much something to look closely into, observe the developments and think about where these things are really developing real utility.
It's interesting you mentioned Sweden there. Could you remind our audience the developments going on there?
Yeah, the Swedish development is the e-krona. One of the central thrusts of the argument about developing a central bank digital currency is that um, as payments become electronic, more and more of the type of money that people access is essentially a kind of private form of money. The public money, which is available as cash, is declining. The public and businesses don't have direct access to central bank accounts. They can't open up accounts at the central bank. So there's a kind of concern that as payments become more electronic, then individuals and businesses don't have access to public money, central bank money, essentially, which is counterparty risk free, or the risk is only on the sovereign. So, because of the precipitous decline in the use of cash in Sweden, one of the reasons why the Riksbank has been looking at developing a central bank digital currency is to maintain that public access to public money and not have to always rely on private forms of digital cash.
Well, on the topic of concerns there, a lot of people have some of concerns about the environmental impact of crypto because money has to be done by complex problem solving on the public blockchain, which in turn centralizes those with big power and can meet budget. But what alternatives will create the utility of crypto without having a global impact in ESG
Yeah,
problems?
it's a good point. Citi just released its ESG report, so these concerns are foremost in our mind as well. And what I would say is that there are different types of cryptocurrencies. Bitcoin is based upon a proof of work, and that's what requires that massive electricity expenditure. The central bank digital currencies will not rely on a proof of work. These will be, quasi-centralized systems, not open to, anonymous, people running nodes. So you won't have the same issue with central bank digital currencies. And then other examples, private examples like a Libra, for example, won't rely on a proof of work, so it won't have that massive energy expenditure. So the energy expenditure is a function of how people achieve consensus in these open ecosystems, especially Bitcoin being the banner for that. But some of the other crypto proposals don't have that same environmental impact.
All right, well, moving on then, I want to also touch on the topic of data sharing and privacy because one development to come out of the pandemic is this talk of tracking apps and contact tracing. We're told people to download tracking apps so the government can do a better job at controlling the pandemic. But what does this mean for privacy and what happens to our data after lockdown? For example, we've got Apple and Facebook offering apps for track and trace, giving their data away, and some people might worry about sort of Cambridge Analytica post COVID. What do you think about that?
So I think the principles of data privacy and protection remain the same. And the principles, for example, in GDPR, is basically you've got rights to your own data and you share data with consent. What's really happened is the background has changed. So probably you're more willing to give consent to more data sharing in this environment for public health reasons. But I don't think that the principles of data protection have changed. I think they're the same. And I think actually when it comes to the key topic of digital identity, what I see is a greater acceptance of the idea that you only share the data which is absolutely necessary to share. And so if I look at, for example, the design of, you mentioned some of the big tech companies who are looking at these techniques, they're trying to build in this privacy by design idea. Some of the centralized government databases won't be so private. And I hope that in those cases that anyone who's collecting that personal information is doing so based upon an informed consent. I think what this crisis just does really is make it more likely that people will give their consent to sharing their data, but the principles remain the same.
So people's attitudes towards sharing data are changing.
Well, in this crisis, yes. But I think emerging from this crisis, there's a heightened awareness, a heightened consciousness about the dangers of untrammeled data sharing, whether in the political sphere or privately in terms of identity theft. And I think if you buy that general thesis that the world is going to become more digital, then a more digital world requires digital privacy, digital identity. And so I don't think that, I think, again, this is something where it's an acceleration. You see lots of questions about these apps, about these tracking apps to do with privacy. Even in a crisis like this, people are still asking about the privacy. So I think the awareness is there, the consciousness is there, and that will carry over into a post-COVID world.
Mm-hmm, mm-hmm. And you mentioned there big techs, and that's where I want to end on, really, how they're being impacted by the pandemic. Because when you ask the question, which I have done to you a few times now, who will be the winners and losers, and in this case, immune from the crisis, the obvious response would be the big techs are going to be the winners. Well, taking that into account, what regulatory, political and ethical concerns need to be addressed before they completely take over and create their own currencies, for example, off the back of it, especially after the pandemic?
Well, I do believe there was a general trend of, people say software's eating the world. I would say platforms are kind of eating the world. But platforms, as they grow, do bring in other people as well. They provide utility to suppliers and to buyers. And I think one interesting thing is, or one definition of the sharing economy that we were so familiar with, Uber and Airbnb and all of these different sharing platforms. One definition of a sharing economy platform is that it's bringing online an underutilized asset. The ride-sharing companies brought online the underutilized asset of private cars, and the accommodation platforms brought online the underutilized asset of spare rooms. So I think there's going to be an enormous opportunity for platforms to bring online I feel like the new underutilized assets, which is actually a lot of people at home with a bit of time on their hands. So that cognitive surplus needs to find an outlet, and I think there will be new platforms developing. So the venues that we've had to date, the venues for buying stuff, for booking holidays, the venues for consuming media, I think there's going to be space for new venues for sharing and collaborating in different ways. So I think also that the platforms that are existing and the platforms that emerge will accelerate the integration of financial services. So obviously, any platform needs to be able to take payments and make payments, do FX, but I see those platforms will increasingly offer credit, point of sale financing, insurance, and other forms of financial services. So I think the picture is quite rosy for platforms, and I think actually they will play a positive part in bringing back GDP, hopefully quicker than people are expecting.
And what about the banks? I think there's going to be a 50-50 in the case of whether they're going to win or lose. Where will they benefit maybe from the pandemic, and what will be the main challenges?
Well, banks in this environment, and certainly in the case of like a Citibank, for example, often experience a kind of flight to quality. In the markets business, when there's volatility, markets businesses tend to do pretty well. In payments businesses, some things go up, some things go down. So obviously anything travel related at the moment is going down. But as we're living in a kind of contactless world, contactless payments is going to go up, and digital payments will go up. So it's very much a mixed picture in terms of what's going up and down. I think really what this will do is accelerate the bank's digital transformation. We are, in a sense, what the realization has been from the crisis is that we don't all have to be in the same place to do the work, and we're quite happily working from home and on, video conferences. Actually, for banks, it's relatively easy to have working from home practices, and we're doing so relatively effectively. But I think what it will do is create different types of interactions with clients, and things that we would normally do on paper are very rapidly moving to electronic.
And collaboration, are we going to see a sort of slowdown in collaboration? Maybe banks will be a little bit more cautious going into a partnership, or is it the opposite?
Look, I think there will be an acceleration of fintech partnerships and an acceleration of fintech overall. There'll be many new spaces. I mean, my thoughts on this crisis are, in a sense, there's an adjustment to go through, but there's no overall reason for GDP to be permanently impacted, because human needs have not gone down. In fact, human needs have increased, but they've just relocated to different places. We need the same stuff, but we need them delivered in different ways. So what I think is happening is that many companies are undergoing pivots and trying to occupy these new niches, these new market opportunities, and very rapidly, I think the market will fill those spaces. Mm-hmm. And again, banks will need to follow those customers who are trying to make those pivots and support those customers who are making those pivots. Mm-hmm. So I'm, kind of optimistic. In fact, I would say that we already live in a post-pandemic world. Spanish flu and Black Death and other things that happened in the past. That civilization has gone on from this, and I still believe that progress will continue and probably be accelerated as a result of the pandemic. So while this is a terrible thing that we're going through, it requires a massive adjustment for many of us, and people are impacted directly. I'm still overall bullish about the path of human progress.
I think the main word taken away from this interview then is acceleration. Things that were already on course before the pandemic have just been sped up. Tony, there's a million more questions I could ask you, but I think we'll leave it there for now. And I hope to talk to you again soon. But thank you very much.
Thank you very much.